Have you ever wondered what $1 million could really do for you? I mean, if you had it sitting in your account right now, what would that kind of money actually pay you every single month? Would you be able to live off it forever, travel anywhere, buy what you want, and never work again? Most people think $1 million means freedom, but when it comes to dividend income, the truth might shock you. Because $1 million doesn't always mean what you think. Depending on where you put it, it could give you just enough to survive, or more than enough to never look back. So let's break it down, one step at a time, and see what happens when you use that same $1 million in different ways. The results will surprise you. Let's start with something that sounds incredibly safe. Something almost everyone knows, Johnson & Johnson. A global healthcare giant that's been paying dividends for over 60 consecutive years. It's what many investors call a sleep well at night stock. It doesn't move fast, it doesn't crash hard, and it rarely misses a payout. With a dividend yield around 3.1%, that $1 million would earn you roughly $31,000 per year. That's about $2,590 every single month, deposited straight into your account. Now, on the surface, that might sound like a dream. Nearly $2,600 a month without lifting a finger. But when you start adding up rent, utilities, food, transportation, insurance, and the cost of just existing, that number begins to feel a lot smaller. It covers the basics, sure. You could live modestly, maybe rent a small place, eat at home most nights and still have a little left over. But it's not freedom, it's maintenance. You'd still be watching every expense, and one unexpected bill could throw everything off, and so maybe ultra safe isn't enough. What if instead of one single company, you spread your money across dozens of them, all paying reliable dividends, but wrapped together in one powerful ETF? That's where SCHD, the Schwab US Dividend Equity ETF, comes in. This fund is built to include strong, established companies with consistent cash flow, stable earnings, and a solid history of paying and growing dividends. The yield is around 3.8%. With your $1 million investment, that becomes about $38,000 per year, or roughly $3,180 per month. Now we're starting to see movement. That's a paycheck big enough to breathe a little. You could cover your bills, keep a car, take a few trips, and even have some money left over for saving or investing again. It feels balanced, safe, but rewarding. The ETF handles the diversification for you, so even if one company stumbles, the others hold you up. But it's still not full freedom. It's stable, calm, dependable, yet not luxurious. You're living, not thriving. Now, what if you wanted to step into something a bit more interesting? Something with higher payouts, but also tied to a specific, profitable industry. That's where the energy sector often grabs attention. Energy companies generate massive cash flow, and many pass a large portion of that back to shareholders. A strong ETF like the Pacer American Energy Independence ETF, ticker USAI, offers a dividend yield around 4.3%. That same $1 million now gives you $43,000 per year. That's about $3,600 every single month. Suddenly the world feels a bit different. That's enough to live comfortably in most cities, pay for health insurance, enjoy a few luxuries, maybe even save a little more aggressively. But here's where things get tricky. Energy is unpredictable. Prices rise and fall with politics, global demand, and the economy itself. One bad year, one major regulation, and that $3,600 a month might shrink. Still, for many people, this is where life starts to feel good. You're not worrying about bills, you're actually living. But what if instead of oil or gas, you turned your focus towards something that feels almost tangible? Real estate. Not the kind where you fix leaky toilets or chase tenants for rent, but the kind that pays you automatically through a REIT, a real estate investment trust. One of the best known is Realty Income, ticker symbol O, often called the monthly dividend company. With a yield near 5.7%, that $1 million suddenly turns into $56,700 a year. That's about $4,730 per month, every single month. Like clockwork, and that's a big shift. Now you're not just getting by, you're living with confidence. You can rent a nice apartment, eat out when you want, travel a few times a year, and still save money. Realty Income owns commercial properties leased to big, stable brands like Walgreens and FedEx, so the rent checks keep coming in. and the dividends flow right back to you. The fact that it pays monthly makes it feel almost like a salary. But even here, there's risk. REITs depend on interest rates, and when borrowing costs go up, their prices can fall. Still, it's one of the few investments that makes your portfolio feel alive. Something steady, something real. At this point, some people would stop. Nearly $5,000 a month for doing nothing sounds like financial independence. But others might look at that number and think, what if it could be more? What if there's another level? That's where many investors turn toward dividend powerhouses like UPS. The delivery giant has recently offered yields around 7.5%, which pushes your yearly income to about $75,000. That's $6,250 a month. Now the difference is massive. $6,000 a month lets you live just about anywhere, travel, buy what you need, and still invest the leftovers. It's the kind of cash flow that doesn't just maintain a lifestyle, it builds one. You could start a small business, take long vacations, or simply decide to slow down and enjoy life on your terms. But there's a catch. A high dividend often comes with pressure. For UPS, that payout depends heavily on global shipping demand, fuel prices, labour costs, and consumer spending. When the economy slows, profits drop, and dividends can get cut. So while the reward is high, the safety net is thinner. The question becomes, are you okay riding those waves for a higher payout? If you're chasing the absolute top of the dividend mountain, though, you might find yourself staring at something that looks too good to be true. And sometimes it is. Mortgage REITs, like AGNC Investment Corp, are famous for their enormous yields, often around 15%. Now imagine that, $1 million bringing in $150,000 a year. That's $12,500 every single month. The kind of income that makes you think, that's it, I'm done. You could move anywhere in the world, work only if you felt like it, take care of your family, and build the life you've always wanted. On paper, it's total freedom. But here's the reality. Those ultra-high yields usually come with huge risk. Mortgage REITs depend on interest rate spreads, housing markets, and government policy. When conditions shift, payouts can get slashed in half overnight. One quarter you're earning $12,000 a month, the next you're earning $6,000 or less, and their stock prices can swing wildly too, sometimes dropping 30 or 40% in a bad year. That's why most seasoned investors treat them carefully, because yes, the cash flow is seductive, but it's also fragile. Now let's pause for a moment and go back to the other side of the spectrum, the calm and steady world of consumer staples. Think of Coca-Cola, a company that's been quenching thirst for over a century, known for its stability and consistent dividend payments. With a yield near 3%, your million would earn about $29,700 a year. That's $2,475 a month. It's not exciting, but it's solid, the kind of income you can count on in both good times and bad. Coca-Cola has survived wars, recessions, and inflation spikes, and it just keeps paying. But while it's reliable, it's also slow. The money trickles in, not rushes. And that's the paradox. The safest investments often feel the smallest, while the biggest rewards hide behind the sharpest corners. So, after looking at all these options, from stable consumer brands to bold mortgage REITs, what's the shocking truth about $1 million dividend portfolio? It's that your freedom depends entirely on what kind of risk you're willing to live with, because that same million can pay you anywhere from $2,400 to $12,500 a month. The difference isn't luck, it's choice. You can choose peace of mind and earn less, or take on risk and chase a lifestyle of abundance. There's no wrong answer, only trade-offs. And yet here's something even more surprising. For most people, the emotional comfort of knowing your income will actually be there every month is worth more than the promise of doubling it. Because when you're living off dividends, it's not just about the number, it's about the feeling of waking up knowing your bills are covered, the feeling of stability in a world that never stops moving. That's what real freedom looks like. Maybe that means holding a mix, part in something like SCHD for security, part in realty income for monthly cash flow, maybe a small slice in energy, or UPS for growth. The point is, your $1 million doesn't need to chase every high yield. It just needs to work quietly, consistently, and predictably. That's the secret most people miss. You don't win this game by taking wild risks. You win by staying in it long enough for those dividends to compound, grow, and eventually replace the need to ever work again. Because when you finally reach that point, when your money pays you while you sleep, the amount matters less than the freedom it represents. Whether that's $3,000 a month or $10,000 a month, the feeling is the same. It's control, it's time, and it's knowing that your life belongs entirely to you. So, if you've ever dreamed about what $1 million could actually do, remember this: it's not about the number itself, it's about how wisely you let that number work. $1 million in the right hands can build stability, peace, and purpose. But in the wrong hands, it can vanish chasing illusions of higher yields. The shocking truth is that the difference between surviving and thriving isn't the size of your account, it's the strategy behind it. The dividends are just the tool. What matters most is the plan, and if you can master that, the freedom everyone dreams of might be closer than you think. Smash that subscribe and like button, leave a comment, and see you soon. Just a reminder, I'm not a financial advisor. This video is for educational purposes only, and any results depend on your own decisions and actions.